Stocks are down, but more interestingly, the dollar is also down. It's actually a surprise for Wall Street because most analysts during the election, after Donald Trump's victory, and even up to the moment that the tariffs were announced, were saying tariffs should be positive for the dollar. Why? Because when Americans buy less stuff abroad, they also spend fewer dollars buying foreign currencies, which should be a boost for the dollar. It might be true that this happens, but there are other factors that can be more important. One of them is the fact that America was a great place to invest because it was growing at a faster rate than the rest of the world. A lot of that had to do with Silicon Valley companies being extremely productive and exporting services that the rest of the world wanted to buy. Now, the idea that investors are starting to entertain is that maybe the US will not be this high growth economy anymore. Is this because they hate anything that goes against free trade? Well, not necessarily. We saw that markets were very optimistic after Donald Trump won the election. It's probable that what markets are realizing is that these protectionist policies that the US is launching, they're not really like the policies that have made China, South Korea, and historically Japan grow at a faster rate. They're more similar to Latin American policies, or at least those that these countries used to implement between the 1950s and the 1980s. The difference is that while Asian economies protected their key industries to make them more competitive abroad, Latin American countries tended to protect them so foreign competition would not damage their earnings. The problem with that is that we know it tends to lead to weaker productivity growth. And this is probably what markets are fearing today.